Welcome to The Deep Dive, your go-to for cutting through the noise and extracting the real insights from the financial world.
Great to be here.
Today, we're taking a closer look at AMRK Precious Metals, ticker AMRK, and their Q4 and full fiscal year 2025 earnings call.
Yeah.
This isn't just another earnings report. It's a fascinating snapshot of a company in the middle of a pretty significant strategic transformation.
That's right.
Navigating some deep currents in the precious metals market.
Exactly. While the initial market reaction might have focused on the surface level numbers, digging into this call really reveals a leadership team actively reshaping their business model.
Right.
They're trying to build resilience in a complex environment. And we're going to unpack those intentional shifts, what the numbers truly mean, and, how it impacts you.
Okay, let's jump right into the headline figures then for the fourth quarter.
Let's do it.
AMRK reported diluted GAAP earnings per share of $0.41. When we look at that on an adjusted non-GAAP basis, it came in at 60 cents, actually beating consensus estimates by, a slim 0.3. Now, on the revenue front, things were a bit softer, came in at $2.51 billion. That's a 0.5% decrease year over year and missed consensus by roughly $396 million. So kind of a mixed bag at first glance.
It definitely looks mixed, but what immediately grabs your attention, despite that revenue miss, is the gross profit. It surged a remarkable 90% year over year to $81.7 million.
90%.
Yeah. This divergence between the top line revenue and that, exploding gross profit is the core narrative we'll be exploring today.
Okay.
Net income for the quarter was $10.3 million, which translates directly to that $1.41 diluted GAAP EPS you mentioned.
Right, that 90% jump in gross profit you just mentioned really does leap off the page. When top-line revenue is a bit softer, what's the underlying magic making that margin expand so dramatically? Right. Is this the strategic pivot we've been talking about?
Yeah. It absolutely is the strategic pivot at work. The primary driver here is crystal clear. Recent acquisitions. Okay. AMRK specifically cited controlling interests in Silver Gold Bull SGB and the acquisitions of Spectrum Group International,
right,
Pinehurst Coin Exchange, and AMS Holdings. Let's just call them AMS.
Got it.
These additions, particularly those focused on collectibles, are meticulously designed to bring higher margin revenue streams into the business.
Makes sense.
And we're seeing that. A significant improvement in their gross profit margin, which climbed to 3.25% of revenue from just 1.7% in the prior year.
Big difference.
Huge.
Yeah.
This isn't just about improving revenue quality. It's AMRK's strategic play to sort of insulate itself from the inherent volatility of the pure bullion market.
Right, build some stability.
Exactly. Transforming into a more resilient, margin-focused enterprise that can, thrive even when fear and uncertainty aren't driving bullion sales.
That makes perfect sense, especially as a defensive play. But these strategic acquisitions, this expansion, they don't come for free, do they?
No, definitely not.
Because while margins are up, we also saw expenses climb quite a bit.
That's a crucial point. While the quality revenue is improving, there's a significant upfront and ongoing cost to this expansion.
Okay.
We saw a substantial increase in selling, general and administrative or SG&A expenses, up 135% year over year.
135%.
Yeah, $53.4 million.
Yeah.
This was largely due to higher compensation, advertising, consulting fees, and the complex integration costs of these new entities.
Right, pulling them all together.
And depreciation and amortization also jumped a staggering 201% to $8.6 million.
Wow.
Reflecting the amortization of intangible assets from these very acquisitions. So yes, they're investing heavily to reshape the business.
Okay, delving deeper into the financials, it looks like their cost of money also went up significantly. Interest income decreased.
Yeah, down 34%.
To $5.3 million, while interest expense rose 34% to $12.9 million. That's a significant squeeze, particularly in this higher interest rate environment we're in.
It is a critical headwind. The increase in interest expense was driven by higher overall borrowings related to precious metal leases, their trading credit facility, and product financing agreements.
Okay.
This highlights what's known as the cost of carry, essentially, how much it costs them to finance the precious metals sitting in their vaults and run their lending ops.
Right, like inventory costs on steroids for them.
Exactly. Imagine AMRK, like a shop owner with really expensive inventory on the shelves. In this high-interest environment, every day that inventory sits there, it costs them more and more in financing. It eats into their margins.
Makes sense.
And earnings from equity method investments also turned to a loss this quarter from a gain a year ago, further impacting the bottom line.
Some more pressure there too.
Yep. Ultimately, this led to GAAP net income attributable to the company decreasing to $10.3 million from $30.9 million last year.
Quite a drop.
And adjusted EBITDA dropped 24% year over year to $29.2 million. So despite the strong gross profit story, the operational and financing costs really weighed heavily on their profitability this quarter.
Before we move on, let's quickly touch on the full fiscal year 2025 results, just to give some broader context for these trends.
Good idea. For the full year, revenue was $10.98 billion, up 13% year over year.
Okay, so revenue up for the full year.
Yeah. Gross profit increased a solid 22% to $210.9 million. However, net income for the full year was $17.3 million, down significantly from $68.5 million in the prior fiscal year.
Ooh.
And diluted EPS was $0.71 compared to $2.84 in FY24.
Big difference again.
So the full year trends largely mirror the Q4 story. Strategic growth and margin expansion through acquisitions.
Good part.
But also increased operational costs and interest expenses eating into profitability. What we're seeing here is AMRK trying to build an arc against the bullion storm of market headwinds.
I like that analogy.
Investing heavily in these acquisitions, but that arc comes with a steep construction cost in the short term.
That's a fascinating look at the balance sheet and the income statement. Now, shifting gears, I'm curious how these financial shifts are playing out on the ground.
Operationally, you mean?
Yeah. What does the actual operational activity look like for their core bullion products, given this strategic pivot?
Well, the operational metrics for their core bullion business, they tell a story of challenging market conditions.
How so?
Gold ounces sold in Q4 were down 23% year over year.
Okay.
And silver ounces sold were down 38%.
Ouch.
New direct-to-consumer, or DTC, customers were also down significantly, 81% year over year in Q4.
Whoa, 81%.
Yeah, though it's worth noting the prior year quarter benefited heavily from the SGB acquisition, so that's a really tough comparison.
Okay, context is important there.
It is. However, the total number of DTC customers increased 37% year over year to approximately 4.2 million.
Okay, so the overall base is growing.
Right, largely due to the contributions from the SGI, Pinehurst, and AMS acquisitions, alongside organic growth from JM Bullion. So while the absolute number of new DTC customers in Q4 was down,
the overall customer base is expanding robustly through M&A, reinforcing that strategic shift. And what about the average transaction size for those DTC customers, and how quickly is inventory moving?
Well, the DTC average order value decreased 15% year over year to 2,443 3-ols for the quarter.
Smaller orders, then.
Yep. And their inventory turn ratio also decreased to 1.9, down from 2.3 a year ago.
So inventory is sitting longer.
Precisely. So what does this all mean for you? While the total customer count is up thanks to M&A, the core bullion business saw lower volume and smaller average purchases, coupled with slower inventory movement.
Which clearly suggests a more challenging environment for their traditional precious metal sales.
Absolutely. And it really underscores why this strategic pivot into higher margin collectibles is so critical for them right now.
All right, let's peel back the layers and move to management's commentary. They stressed platform resilience despite what they called increased supply and range-bound premium spreads.
Right, the headwinds in bullion.
What were the key strategic updates they highlighted during the call, beyond just, the acquisitions themselves?
Management is explicitly pushing deeper into collectibles through these recent acquisitions, like Stack's Bowers, Pinehurst, and AMS Holdings.
We mentioned those.
The goal here is quite clear: to smooth out the cyclicality of bullion spreads, especially during periods of low bullion volatility.
Makes sense. Bullion can be up and down.
Very much so. It can be feast or famine. So by adding collectibles, they're diversifying their revenue streams. Management believes these transactions are accretive and will lift gross margins, providing a more stable and predictable revenue base over time.
And we heard a pretty striking example of that counter-cyclical nature already playing out, didn't we?
We did.
Suggests this strategy is already yielding some fruit.
Absolutely. The CEO highlighted a recent Stack's Bowers rare coin auction. Generated $62 million in sales over just 9 days.
$62 million.
Which was their largest sale in history.
Wow.
This strongly supports the idea that the counter-cyclical nature of these acquisitions is already proving beneficial. It's providing a higher margin revenue stream precisely when the core bullion market faces headwinds.
It's a compelling data point then, demonstrating that this isn't just theory, but it's actively contributing already.
Exactly right.
Beyond acquisitions, what about operational improvements? We heard a lot about centralizing things and leveraging technology.
Yeah, and here's where it gets really interesting on the operational front, I think.
Okay.
The company has made significant progress centralizing logistics and automating operations at its AM Global Logistics, or AMGL, facility in Las Vegas.
Ah, the Vegas facility.
They reported being 95% complete on the infrastructure side, with software and IT integration ongoing.
So almost there.
Almost there.
Yeah.
This move has already led to increased capacity, substantial cost savings, and the ability to onboard new clients efficiently.
So it's not just cutting costs.
No, it's about building a scalable platform that should translate to more business and market share opportunities when the market eventually heats up again.
And they gave an example of synergy, too.
They did. A tangible example. They've already completed the migration of Pinehurst's logistics to AMGL, so capturing those cost-saving synergies right away.
Did management provide any formal numeric guidance for the next fiscal year? Investors often look for that clarity, to project future performance.
No formal numeric guidance was issued.
Okay.
The commentary instead focused on themes: continued cost containment, optimizing operating leverage,
Getting more profit per sale.
getting more profit out of each sale as their fixed costs are spread over a larger revenue base, and capturing synergies from their recent acquisitions.
Okay.
This lack of explicit numbers likely contributed to some market uncertainty after the initial release. It kind of leaves investors to infer the quantitative impact of these qualitative strategic moves.
Right. We also heard some macro commentary from the call describing the current environment for bullion as slow or soft. What's a good environment for them typically?
That's interesting, right?
And what are they battling right now in the broader market for investor attention?
Well, a good environment for AMRK typically involves volatility and uncertainty in the equity markets, what the CEO referred to as fear and uncertainty.
So when markets are shaky.
Exactly. He cited the Silicon Valley Bank crisis as a historical example of a strong tailwind for them. It's almost counterintuitive to traditional investing, isn't it?
It really is.
While everyone else is bracing for impact, AMRK can often find its stride in those moments of market unease.
So with equity markets doing well recently.
It's harder to compete for investor attention. And they also noted that while gold is at record highs, this demand has largely come from central banks.
Not retail investors.
Not translating into a widespread FOMO, or fear of missing out, effect among their DTC retail customers. And that's a critical distinction that impacts their retail segment, because central bank buying doesn't really drive consumer premiums.
Okay, that makes sense. Tariffs were also mentioned as a point of consternation. How are those impacting the business? Why are they such a headache?
Yes, tariffs and changing tariff policies, particularly concerning gold imports from regions like Switzerland and London, are causing significant disruptions.
Not just a minor issue then.
No, not at all. This uncertainty can dramatically increase their cost of carry, affect their hedge positions,
Replicates things.
and even lead to temporary backwardation in the market, where near-term spot prices are higher than longer-term prices. For a company like AMRK that relies on precise hedging and efficient inventory management, tariffs really throw a wrench into the works.
So messy.
It makes it harder to lock in profitable spreads, and managing these challenges adds another layer of complexity and cost to their operations, directly impacting their profitability. It's like a constant tightrope walk for them.
But there are some pockets of positivity, right? Despite these challenges and economic headwinds.
Absolutely. Management specifically highlighted continued strength in semi-numismatic products, higher premium bullion,
Okay.
and, as we discussed, the robust rare coin market through Stack's Bowers, which is a key part of their diversification strategy.
Yeah, the collectibles.
Their CFC finance business is also growing. The loan book recovered over $100 million, and there's an uptick in new loans.
Good news there.
And an increase in silver prices above $40 an ounce has shown some positive impact from silver buyers recently, suggesting some potential tailwinds if that trend continues.
Right.
So yeah, it's not all uphill. There are strategic bright spots.
So, okay, we have this mixed bag of results. An adjusted EPS beat, but a revenue miss. Huge jump in gross profit offset by rising expenses.
Yep.
The market initially reacted negatively after hours, but then stabilized to a neutral to cautious sentiment by the next day's close. What do you make of this rather indecisive market reaction?
Well,
What are investors struggling to reconcile here?
It seems the initial market reaction likely fixated on the revenue miss and maybe more importantly, the lack of specific numeric guidance.
Right, the uncertainty.
Perhaps overlooking some of the underlying strategic strength and long-term positioning. Investors are clearly weighing the immediate headwinds in the core bullion business, increased supply, range-bound premiums, high carry costs,
What are the challenges?
against management's clear strategic pivot towards higher margin, more counter-cyclical collectibles, and those aggressive operational efficiencies we talked about.
So it's a waiting game.
It's definitely a show-me period. While the significant gross profit growth is a strong signal that the acquisition strategy is working on the margin front.
The market needs to see how these synergies fully materialize and consistently translate to the bottom line amidst ongoing macroeconomic and market volatility.
Exactly. Show me the money, essentially.
That's a great distillation. So what does this all mean for you, the informed listener, if you're tracking AMRK? What are the key things to be watching for in the next few quarters?
Okay, the crucial catalysts, I think, are clearer evidence of synergy and margin realization from the SGI, AMS, and Pinehurst integrations.
Are these acquisitions truly paying off?
That's the question. You'll want to watch seasonal retail flows into both bullion and collectibles. See how those perform.
Okay.
The path of gold prices, especially around upcoming Federal Open Market Committee meetings and inflation prints, that always matters.
Affects demand, right.
Affects central bank and retail demand. And of course, updates on mint capacity utilization and logistics savings from that AMGL facility in Vegas.
See if those efficiencies are really hitting the bottom line.
Right. While gold near record highs can keep top-line activity elevated, the real determinant of margin realization and overall profitability will be retail premiums and their financing costs.
Got it.
This isn't just a gold story. It's a narrative of strategic diversification and operational optimization in a, well, challenging core market.
All right, it's time for our This Is Not Financial Advice segment,
My favorite part.
where we pitch an outrageous but plausible trade idea like we're addressing an investment committee. Remember, this is purely for entertainment and educational purposes.
Absolutely. So given that the market initially fixated on the revenue miss and the lack of numeric guidance, potentially overlooking that substantial 90% gross profit surge,
The good news.
from higher margin acquisitions and management's aggressive cost-cutting and integration efforts, we propose a diversified value play with a macro hedge.
Okay, intriguing. Lay it on us. What's the play?
Initiate a long position in AMRK. The thinking is you're capitalizing on what appears to be an oversold condition. If the market failed to fully appreciate the quality of the gross profit expansion and the strategic pivot we've discussed.
Okay, long AMRK. But hedge it how?
Right. To hedge against the ongoing bullion market headwinds and the potential for a broader market pullback that could still affect precious metals, we also suggest buying out of the money put options on a broad precious metals mining ETF.
Like GDX.
Like the Van Eck Gold Miners ETFs, GDX, for example. This strategy allows us to bet on AMRK's strategic shift to higher margin collectibles and operational efficiencies, outperforming the more volatile, spread-pressured core bullion business,
Makes sense.
while also providing a buffer against the general sentiment in the broader gold sector. It's basically a bet on strategic resilience over cyclical noise, with a safety net for the sector.
That's certainly an interesting angle to consider. So to wrap up then, AMRK Precious Metals delivered a Q4 that clearly showcased a significant increase in gross profit.
Driven by those strategic acquisitions into higher margin collectibles.
However, a revenue miss and higher operating expenses, along with that lack of formal numeric guidance, left the market feeling, well, neutral to cautious.
Yep. Management is actively integrating these new businesses, optimizing operations through automation, and trying to navigate a challenging environment of high spot prices, squeezed retail premiums, and rising carry costs.
It's a strategic pivot in motion, isn't it?
It really is. With some clear successes on the margin front, but also some significant costs and market dynamics to contend with as they reshape the business for the long haul.
As always, please remember that all information shared here is for educational and informational purposes only and should not be considered financial advice.
Please do your own research.
Conduct your own due diligence before making any investment decisions. We hope this deep dive into AMRK's earnings has given you valuable insights into a company in the midst of a fascinating transformation.
Yeah, lots to watch here.
What stands out to you from this call? We encourage you to continue exploring these topics. Thanks for tuning into The Deep Dive.